Hello, everyone. Welcome back to the Fintech and Financial Inclusion Executive Program. We will start today a new episode of our program. We are in day 5, Fintech Technology Foundations. So, for, at the end of this episode, we will understand the blockchain technology, its applications, risk, and opportunities for fintechs. Also, we will identify the importance of artificial intelligence, machine learning for fintechs, and recognize the ethical considerations in AI. Cloud computing, which is the backbone of the modern fintech, and it provides the fintech organizations that require the scalability and flexibility for their infrastructure to grow and process the data and enable the real-time transactions and analytics, where their network will be interconnected with the servers and systems to be accessible from anywhere with the internet connection and power everything from different sectors, starting from mobile banking apps to complex financial modeling. Big data and analytics are very important because the tools of big data will collect, store, and analyze a vast amount of financial information and enable fintech organizations to understand the customer behavior and personalize offerings and mitigate the risk. However, the shifting from traditional financial services to fintech services will require to have a deep analytics for data to uncover the hidden patterns and insights to make informed decision. Artificial intelligence and machine learning are one of the most important technologies for fintech because they are revolutionizing the fintech services and the AI and machine learning will empower chatbots to answer customer inquiries and automate the fraud detection. At the same time, it will personalize the investment recommendations where financial advisors powered by AI will help in analyzing the financial situation and recommend the best investment options, which will be based on the unique goals of for each person and organization. Blockchain and distributed ledger technology uh, are the core of the cryptocurrencies, especially if we are talking, for example, Bitcoin. We have this technology today, most secure technology for transaction-based business such as fintech. And it is not only secure, but it is very fast and transparent. So its capabilities beyond the security, where the distributed ledger technology is decentralized ledger. So it is very important to eliminate the need for centralized intermediaries, enabling faster, cheaper, and more secure transaction. Um, if we think about having a tamper-proof digital ledger, which is secure for recording financial transaction, accessible and authorized for each party, so blockchain will be the best option. Application programming interfaces or APIs act as bridges between different financial systems and applications, enable seamless data exchange and integration which allow all fintech startups to build innovative solutions on the top of the existing infrastructure, whether by leveraging application programming interfaces or by leveraging the APIs, the data flowing freely between different platforms like highway connecting various financial sources. So how the global foundations play out in the local context. Mobile money, where we have some limitations for accessing the traditional banking, mobile money solutions will provide financial services to billions of people worldwide using mobile wallets, such as Vodafone Cash and Orange Money. These platforms will allow cashless transactions, money transfer, and even bill payments, driving financial inclusions. In the digital payments, people will have the option to deal with their money. By this benefit, people are increasingly embracing digital payments as these platforms facilitate the online and offline payments through QR codes, mobile wallets, and point-of-sale terminals, fostering e-commerce and cashless transactions. RegTech and SubTech, regulation technology and supervisory technology, help financial institutions to comply with complex regulations and manage risk more effectively, and these solutions will automate the tasks required to improve data analytics, data analysis, and streamline reporting, making compliance less burden. So the future of fintech is open banking, which you leveraging the APIs to enable third-party developers to build innovative financial products and services, fostering a more competitive and dynamic financial ecosystem. In the financial inclusions, fintechs will develop solutions to reach unbanked and underbanked populations to promote financial literacy and access the essential financial services. Blockchain applications will help in the cryptocurrencies field, and blockchain will be used to secure identity management, cross-border payments, and trade finance, streamlining the processes and reducing the cost. Blockchain and cryptocurrency. Blockchain as a technology is decentralized distributed ledger, which enables secure and transparent record keeping for financial transactions across multiple computers, and it helps in exchanging cryptocurrencies between different platforms, so people can get benefited from blockchain by exchanging digital currencies with secure way. The decentralization is a traditional databases unlike the traditional database, which are centralized and controlled by single entity like bank or government. Blockchain operates in this decentralized network of computers, which we called it nodes, that collectively main database. In the distributed ledger or the database, it is distributed across all nodes in the network, and each node has a copy of entire blockchain, make it resistant to single point of failure or manipulation, which is a security layer that enhance and improve the security with the financial transactions. The blocks and transactions, the information is stored in blocks, and if every and each block is filled with transaction and it is linked together, that's why we name it blockchain. Blockchain already relies on the consensus mechanism to validate and agree on the state of the ledger, and common mechanisms include proof of work used by Bitcoin and proof of stake. In the cryptographic hashed functions, each block contains a unique identifier called hash, and this hash will convert transaction data into fixed length string of characters. it is immutable. So once a block is added to blockchain, it is nearly impossible to be altered, and changing the information in the block world would acquire changing it in all subsequent blocks across all nodes. The blockchain will help in the smart contracts. So smart contracts are self-executed or self-executing contracts with terms directly written into code, and these will automatically will be executed and enforcing the contract terms when the predefined conditions are met. We have a very good and famous example, which is Ethereum, which is a popular blockchain platform for deploying smart contracts in the public and the private blockchains. Public blockchains are open to anyone and are maintained by decentralized network, where private blockchain are restricted to specific group of participants and are often used by businesses for internal purposes. Blockchain technologies are used for cryptocurrencies, and the cryptocurrencies are a very good example for the immunity of blockchain. It is not only immutable, but it is transparent to be immune from any external unapproved modifications. So blockchain have some challenges such as scalability, energy consumption, especially in the proof of work systems, and regulatory uncertainties. So the ongoing research and development aims to address these issues and enhance the technology capabilities. Blockchain is applied already in the cross-border payments, such as payments and remittances in the worldwide and cross borders. So it is powering the solutions like RebbleNet and Stellar Lumens, which offering a faster, cheaper, and more transparent alternatives and disrupting the traditional remittance market. So using such applications powered by blockchain will enable Fintechs to send money across borders in minutes with minimal fees and complete visibility into the transaction process. You can visit Ledger Insights to see more examples. For blockchain finance, trade finance is the process of financing international trade transactions, and it is often hampered by paperwork, fraud risks, and lengthy settlement times. So applying or using blockchain technologies and the platforms such as Marco Polo and We.Trade will streamline the trade finance processes by digitizing documents, automating workflows, and enhancing transparency, making global trade more efficient and secure. Blockchain securities and market capitals, issuing and trading securities, which is already a complex and expensive. So platforms like Harbor and ADEX, empowered by blockchain technology, enable the fractionalization of assets, facilitating easier investment and democratizing the access to to capital markets. So or if you are using such as Goldman Sachs, if you are using such platforms, it will help you to access the capital markets is in an easy way and secure manner. Blockchain in supply chain management. Blockchain is empowering supply chain by enabling them to track goods by using platforms empowered by blockchain such as IBM Food Trust and the Provenance Food Trust and the Provenance, which provide a secure and transparent record of product provenance, ensuring authenticity and traceability throughout the supply chain. Imagine that, knowing exactly where your food comes from, which farm, and blockchain will enable to have a full tracking and trust for the source of food and where and they can track it instantly. In the identity management, blockchain will help the identity in identity management systems to prevent the vulnerability or fraud and data breaches. So the solutions like Sovereign and Hyperledger ND will offer a secure and self-sovereign identity solutions through blockchain to empower individuals to control their personal data. So if we are talking about digital solutions such as digital wallets will be only accessible for authorized parties. You can also visit cloudcodes.com. So blockchain in Fintechs, we have trade finance, we have MENA exchange, which is and trade finance. They are Fintech startups leveraging blockchain to streamline the trade finance processes for businesses to reduce cost and improve efficiency. Land titling and property management. So the pilot projects which are underway to explore the use of blockchain for security or for secure land titling and property management, it will help reducing fraud and improving transparency in real estate sector. For digital identity, governments will get benefited from exploring blockchain-based solutions for secure digital identity management to improve the access to public services and financial inclusion. In voting systems, blockchain will enhance the security and transparency of voting systems. We have some risks and opportunities in cryptocurrencies. So cryptocurrencies can provide access to financial services for individuals and communities, excluding from traditional bank systems. Remittances can be faster and cheaper, and unbanking populations can gain access to credit and investment opportunities. So cryptocurrencies will drive the innovation in areas like blockchain technology, decentralized finance or DeFi, and tokenization. And this opens up new avenues for financial products and services, fostering competition and efficiency. We have also some opportunities in gaining high returns and attracting investors seeking alternative asset classes, while it is highly volatile and they can potentially diversify portfolios and hedge against inflation. We have some risks in the cryptocurrency, such as volatility. Cryptocurrencies are volatile and unpredictable. In the regulation, there are many central banks not regulating or not allowing the trade of cryptocurrencies. We have some security risks where cyber attacks can harm some cryptocurrencies owners, where scams are relevant in the cryptocurrency space and posing threats to digital wallets and exchange. Environmental impact. The consumption of technology generally and for cryptocurrencies especially will consume significant energy, which are raising a concern about the environmental sustainability. We have some opportunities in Fintech, which is a unique perspective in financial inclusion. We have huge number of people still uncovered by financial services, so it is significant opportunity for cryptocurrency-based financial solutions to bring them into the financial fold. In the cryptocurrency payments, it will be faster and cheaper alternative to traditional cross-border payment, which will impose a great opportunity to have some solution to that facilitates the cross-border payments, investment access. Cryptocurrencies will allow the access to new asset class that will potentially have high return. However, in risks, central banks many central banks worldwide didn't regulate the cryptocurrencies yet. Still, we have limited awareness by cryptocurrencies, and the infrastructure in many countries is not ready for cryptocurrencies trading. Artificial intelligence and machine learning have many applications to apply in Fintech to enhance the customer experience by providing 24/7 customer support and introducing tailored financial advice from virtual assistants that understands your spending habits and risk tolerance. And fraud detection and risk management, machine learning algorithms will analyze the vast amount of data in short time to identify any suspicious transactions to prevent frauds and protect financial institutions and customers from financial losses. And AI will help people in protecting their investments. In credit scoring and underwriting, the AI-powered credit scoring models will assess in loan applications to be more accurate and efficient and provide the access to credit for underserved populations to democratize the financial opportunities and assess the loans based on individual financial behavior, not just a single credit score. In global applications of AI and machine learning, using the algorithms to analyze the market data and improve the returns and reduces risk, and think as a super brain from the AI perspective will constantly analyze the market and suggestions based on the investment options, where AI and machine learning will help in automating the repetitive tasks using RPA or robotic process automation to accelerate the day-to-day operations and minimize the human errors, which leads to high efficiency in the daily operations and free up the human resources for more strategic activities and make more innovative and creative tasks. Mobile money and digital payments will be empowered through the AI to provide personalized financial services for mobile money users, which also will enhance the security of digital payments and drive the financial inclusion and trust in digital transaction. In the credit scoring and lending, AI will develop alternative credit. The dependency on AI will develop alternative credit scoring models, which will be based on non-traditional data sources that will expand the access to credit for individuals and small businesses who have limited credit history. The AI will empower the fraud detection systems which will be implemented to protect financial institutions and customers from cyber attacks and financial scams. And this will build trust and confidence in digital finance ecosystem. In the RegTech, AI and machine learning are being used to automate compliance processes and risk management for financial institutions. And this will empower organizations to make them or make their operations more efficient and compliant with the regulations. There are some challenges and opportunities for fintech. We have some challenges such as the access limitations to the data, and the talent acquisition and retention will be a great challenge, where finding skilled people that will have the capability of managing AI or developing AI and machine learning solutions is very difficult today for fintechs to acquire such talents. Also, we have another challenge for regulations, where the regulatory landscape surrounding AI and machine learning in finance and is still evolving and require more proactive engagement with policymakers and adherence to international best practices. In the application of risk management and fraud detection, enhancing credit scoring through AI models will be done through analyzing alternative data sources like social media, purchase history, mobile phone usage, to create more accurate and inclusive credit scoring. And this will unlock the financial opportunities for individuals who have limited credit history or those traditionally excluded from formal financial systems. Also, machine learning algorithms will analyze transactions patterns and the behavioral anomalies in real time and identify suspicious activities with lightning speed to allow fintechs to prevent fraudulent transactions before they occur and minimize the losses in protecting and protect customer or consumer accounts. Risk management will be dynamic through the adoption of AI, and this will help in evolving the fraud pattern and risk landscape adaptation to ensure the protection improvement and explore new vulnerabilities. In the KYC, or Know Your Customer, and anti-money laundering, or AML, using AI and machine learning will help in discovering the risks behind using such automated techniques, and will streamline the compliance processes to reduce the cost, and will free human resources from repetitive and routine tasks to do more strategic tasks. Also, machine learning and AI will personalize the risk profiling through creating unique risk profiles for individual customers based on their behavioral and financial history, to enable fintechs to tailor risk management strategies and personalize security measures by offering more secure and convenient experience for their customers. Mobile money and digital payments will be empowered by using AI to have an automated fraud detection systems that will be implemented to protect mobile money users from unauthorized transactions and scams, and build more trust and confidence. Credit scoring and lending will be optimized using AI, and it will be expanded to individuals and small businesses with limited traditional credit scoring. In cybersecurity and fraud prevention, artificial intelligence machine learning will analyze the network traffic to provide more protection layer against cyber attacks and enhance the security and stability of financial ecosystem. In addition to all of this, AI will be used for automating compliance processes and risk management for fintechs to ensure the adherence of regulations and mitigating regulatory risks. Data privacy concerns to prevent any unauthorized access to customers' data, where there should be ethical data collection practices will keep or will enhance the persons and customers' data privacy. So the data privacy, talent acquisition infrastructure, regulatory uncertainty are three main challenges for fintech organizations, where AI and machine learning will form some challenges for talents to acquire such new knowledge about this technology. We have algorithmic trading and robo-advisors are new technologies will bring some benefits for fintech organization by enhancing the trading efficiency, where the algorithmic trading automates trading decisions based on predefined rules and market data analytics. And this will reduce human errors and increase the execution speed and improve the overall trading efficiency. Also, it will democratize the investment opportunities, where Robo-Advisor will provide automatic investment advice and portfolio management at lower fees than traditional financial advisors. This will make investment opportunities more accessible to a wide range of people, regardless of their wealth or financial knowledge. Data-driven investment strategies, by using the algorithmic trading and robo-advisors, will enable us to leverage vast amounts of market data to identify trends and predict market movements to optimize the investment portfolios. And the data-driven approach leads to more informed investment decisions and potentially higher returns, reducing the operational costs will be one of the most important benefits for using automated trading and investment management tasks. By leveraging the algorithms of robo-advisors, this will allow fintechs to offer more competitive offers and fees and expand their reach into broader customer base. Robo-advisors will tailor the investment regulations and portfolio management strategies for individuals according to their risk profiles, risk tolerance, and their financial goals and the investment time frames. The personalized approach will provide more effective and satisfying experience for each customer. Retail investment will leverage also the Robo-Advisors platform to create growing for personalized and accessible investment solutions to unlock the investment opportunities for previously excluded individuals and support financial inclusion. Platforms that has been designed for micro investing or investment, algorithmic trading and automated portfolio management will enable fintechs to offer micro investing platforms, which will allow users to invest small amounts regularly to build wealth over the time. And this will encourage the saving habits and promote the financial literacy among people. And fintechs will develop algorithmic trading solutions for institutional investors to offer more tools based on data to make decisions and efficient execution dependent on the historical data of the new investors. The challenges will be limited market access, where the access to global financial markets for retail investors will be challenging, and fintechs will need to collaborate with regulators and market participants to create innovative solutions that will overcome these hurdles. Financial literacy and awareness is another challenge, where public understanding of algorithmic trading and robo-advisors is still low, and fintechs will need to invest in educational initiatives to build trust and encourage adoption of these technologies. The challenge of regulatory framework or regulatory landscape are surrounded by algorithmic trading and surrounding the algorithmic trading and robo-advisors is still evolving, where fintechs will need to actively engage with policymakers to ensure a clear and supportive regulatory environment. The ethical consideration in using artificial intelligence and machine learning, AI algorithms can be perpetuate existing biases based on the training data or design flows, where historical data already include some biases according to the origin of people, their colors, their gender, and this will lead to unfair outcomes for individuals or groups in loan applications, insurance, pricing, or algorithmic trading. The explainability and the transparency related to AI, we have to increase the transparency, where complex AI models can be difficult to understand, and it will be challenging to explain how decisions were made or how to identify the potential biases, and this lack of transparency will reduce the trust and arise a concern about the accountability. Data privacy and security should be handled by fintechs through AI-powered platform to handle the sensitive financial data and protect data privacy through robust data security measures, which is essential to prevent any data breach and misuse. AI arise another challenge in job displacement and automation. So fintechs will need to plan for workforce transition and reskilling to avoid negative social impact. We have algorithmic arms race, unbridled competition in developing AI-powered financial tools could lead to an arms race with unintended consequences, and a collaboration between and ethical AI standards are very crucial to foster responsible innovation. So promoting financial inclusion using artificial intelligence will help to address financial inclusion by providing personalized financial services and credit access to underserved populations. And AI will help in reducing the potential biases through guidance or developing guidelines for explainable and responsible AI. The AI-powered risk assessment will help in fraud detection and financial services, and fintechs will help use AI ethically to protect both businesses and customers. Having AI power tools will personalize financial education, make it more accessible to individuals. Developing responsible AI solution will promote financial literacy and empower individuals through informed advices. The opportunities behind using the AI in trust and transparency. Transparent AI models will build trust with public, so fintech can demonstrate the responsible AI practices to foster a supportive environment for AI innovation, and policymakers and fintechs will need to collaborate in developing ethical AI frameworks and regulations that will promote responsible, innovative platforms that will minimize the potential risks behind using AI. So we have some recommendation by minimizing the data collection and implement ethical data collection practices to minimize the bias in data sets and ensure clear user consent are crucial. Develop understandable AI models and provide explanations for algorithmic decisions are essentials for building trust and accountability. Human oversight and control mechanisms are very necessary to ensure responsible AI use and prevent potential harms. Also, proactive assessment of potential negative impacts of AI and implementing negative strategies are essential. The collaboration between policymakers, researchers, and civil society organizations will promote the ethical AI development and address public concerns. We are reaching the end of today's episode, so our quiz will summarize what we already demonstrated through this episode. The first question, which of the following is not a benefit of blockchain technology in finance? Faster and cheaper cross-border payments, fractional ownership of assets, reducing transaction fees, increase risk of financial fraud. Yes, it is increased risk of financial fraud. Which of the following is a challenging for fintech operating cryptocurrency space? High public awareness of cryptocurrencies, limited technical infrastructure, clear regulatory framework, abundant investment opportunities. Yes, sure, it is C, clear regulatory framework. Which of the following is not an application of AI and ML in fintechs globally? Algorithmic trading and portfolio management, enhanced customer service through chatbots, personalized financial services based on user data, automated compliance reporting with regulatory requirements. Yes, the correct answer is the automated compliance reporting with regulatory requirements. Which of the following is a risk associated with the use of artificial intelligence, machine learning, and fraud detection for fintechs? High cost of implementation, limited access to skilled people, potential or privacy concerns. Yes, the risk will be associated with AI and machine learning is the potential of bias. Which of the following is an opportunity for fintechs utilizing AI and machine learning in mobile money solutions? Increased competition in mobile money market, improved security and fraud detection, limited access to user data, lack of trust in digital financial services. So the opportunity is to have improved security and the fraud detection by using the blockchain solutions. Which of the following is a benefit of algorithmic trading and robo-advisor for fintechs globally? Increased human involvement in trading decisions, reduced access to global financial markets, increased risk of emotional biases influencing decision making, lower operational costs. Yes, The benefit will be lower operational cost. Which of the following is a challenge for fintechs developing robo-advisor platform? High demand for investment opportunities. It is not a challenge. Limited financial literacy, maybe. Abundant financial advisors. Lack of access to advanced financial data. Yes, it is limited financial literacy among potential users. Which of the following is an ethical consideration in using artificial intelligence for fintech globally? Increasing profits through AI-powered marketing campaigns, ensuring transparency and explainability of AI algorithms, developing AI models that perpetuate existing pieces, implementing AI tools without user consent. Yes, as an ethical consideration for using AI in global fintech is developing AI models which perpetuate the existing pieces. So the correct answer is C. Which of the following is an ethical opportunity for fintechs using AI in risk management? If we are talking about opportunity, so increasing the risk is not an opportunity. Reducing financial losses due to fraud is one of the opportunities. Implementing AI models that discriminate is not an opportunity. Automating all risk management decisions. So it is the correct answer is reducing the financial losses due to fraud. Which of the following is a recommendation for responsible AI use in fintechs globally? Utilizing AI models with minimal data governance, collaborating with stakeholders, prioritizing profits, or relying solely on AI algorithms for all financial decisions. The collaboration is very important in fintechs, especially if we are talking about the responsible AI and the ethical use of AI. So fintechs need to collaborate with all stakeholders, including policy makers, as we demonstrated in the previous slides. Which of the following is not a global risk associated with cryptocurrencies? High volatility and unpredictable price swings. Enhanced security, it is not a risk. Increased access to financial services. Potential for environmental impact. The correct answer is the increased access for financial services for unbanked population. It is not a global risk. Which of the following is a benefit of AI-powered credit scoring models for fintechs? Increasing the risk of credit discrimination against certain groups, expanding access to credit for individuals, relying solely on AI model, reducing the need for human intervention. Yes, the correct answer is expanding the access because we are using the AI-powered credit scoring models to provide the credit scoring for individuals have limited credit history. Which of the following is a challenge for fintechs utilizing AI and machine learning in the financial sector? Lack of data privacy, ample access to skilled AI and ML talents, clear and supportive regulatory environment for AI use in finance, limited public trust in AI-powered financial tools. As a challenge, the limited public trust in AI-powered financial tools. So the correct answer is D. Which of the following is not an application for blockchain? Centralized government-controlled digital currency is a blockchain application. Secure and land titling is a blockchain, and property management system is a blockchain application. Cross-border trade finance solutions and decentralized marketplaces for buying and selling goods. Yes, A is the correct answer. It is centralized government-controlled digital currencies because blockchain is a decentralized ledger where here we are talking about A is talking about the centralized government control. So it is not an application for blockchain because it is centralized, and the blockchain technology itself is decentralized, distributed ledger. The last question of today's episode: what is the single most important factor for ensuring a successful future for fintechs worldwide? Technological innovation, regulatory clarity, consumer trust, all of the above. All of the above. Thank you for following us today, and we will be waiting for you in the next episodes. If you find this episode is full of information and is useful for your friends or colleagues, please recommend this episode for them to and the channel to follow up and subscribe in the channel. Thank you very much, and see you in the next episodes, and goodbye.